and post. Okay, I think we're just about there. I'm surprised we don't have more people here for scary bookkeeping stories, but guess what, everybody? We're live. Good morning. Happy Friday. It's October 25th, 2019. We're going to flex our brain muscles, our storytelling muscles today, and we're going to share scary bookkeeping stories. I've got one to start us off with. It's actually happening right now. I mean, like right now it's happening. As of last night, we have a client. Erica does the work on the client. And she discovered a large transfer, I guess, out of their bank account. And maybe it was in either way. It went one way or the other. And long story short, the client came back and said, "Oh, it's a loan, to or from the business." And I've made many of these. So we discovered that, long story short, the nature of this business is such that we don't track their income through invoicing or anything like that. Generally speaking, we assume deposits that came in were income. It's a medical type business, so they have a separate medical billing thing. So that's how we keep track of it in QuickBooks. So she failed to let us know that she was making these large loans to and from, and we have rules set up in QBO that just book it to income as a deposit. And so when we had discovered this, Erica, of course, went through all the income entries, pulled out the ones that were actually transfers from the client's personal account, and organized it all in a loan to/from the business owner. And also checked contributions and distributions accounts in the equity section to move any, in case any landed there. And then she went through all the bank statements. And so she was very thorough and grouped everything, and now has it nailed down, and ultimately reported back to the client, "Hey, so it all nets out to $1,000. And the client's like, "There's no way it's $1,000. I put much more than that into the business." And we're like, "Okay, just tell it where it is. Tell us where it is, and we'll find it and correct it." But we've reconciled every account. We've accounted for every transaction. And we're quite certain that this is all there is to account for as far as these loans to and from go. And it's clear to me the client, for whatever reason, just refuses to look at the detail. I sent her the details from the loan account. I said, "Please look at this. Tell me what's missing." And instead of doing that, the client came back last night with screenshots from her mobile device saying, "Here's 2 recent examples." And you can see telling us all the information we already know, telling us that, the 4 digits from the personal account number indicating that it's a loan to or from. And she shows 2 recent transfers, one in for $15K and one out for $15K. And I just wrote back and I said, "Well, these were still sitting in the bank feeds because they were from within the past week. I just added them in, but since they wash, we're still left at $1,000 balance in the loan account." And it's this kind of thing drives me nuts, because it's like the client doesn't want the solution. It's like the client just wants us to agree and say, "Oh yeah, you put much more money than that in. We must be wrong." Right? And I love dealing with clients like this. If it didn't impact Erica directly, I would just dismiss the client and say, "You know what, we're done. I don't have time or patience for this kind of thing." So that's my very current story. And initially I posted, we do Slack with all of our clients, so I posted a link in Slack to a Google Sheet to make it really easy. Just click over and you can see all the details. Clearly the client refused to do that. 3 times I've asked her, "Please look at the detail." Refuses to. And but she posted screenshots for me. So I said to myself, well, clearly the client likes screenshots. So I'm just going to take a screenshot of the spreadsheet, which I did last night, and put it into Slack. And then, just to cover all bases, because I've learned I have to do this with some people, I had to actually write the instructions. Please click on the image for a larger view, because I don't want to waste the time of them going back. Oh, and here's the other thing that was funny. Because I'd mentioned that I even scanned the income accounts after Erica did her part to make sure there wasn't like a deposit that we missed that really should have been the loan and not income. And her response to me, and I love this, this is when you know a client is really not looking for the solution. They're just deflecting anything you say. Because her response to me is, "They're not deposits, they're transfers." I'm just like, so now I have to really, it's excruciating with these kinds of clients, because now I have to go back and explain, look, when I say deposits, I just mean money coming into your bank account. I understand that it's actually a transfer. What I didn't even bother to do, but I probably need to in this case, is to go a step further and explain that even though in the real banking world it might be a transfer, because it's a transfer at the same bank between your personal and your business accounts, from business books perspective, it's not really a transfer, because we don't track the personal account on the business books. You really have to start explaining these things to clients like they're a 3-year-old. And that's what makes me crazy, because I don't have the time or patience. And probably 5 years ago, I was a lot more patient about these things, but I'm getting older and grumpier. and less patient for these kind of things. So that's my first scary bookkeeping story. And it's, like I said, it's very current. It's happening right now. Hopefully my client doesn't watch this video. They'll probably know it's them just from the details I described.
Darn.
Anyway, who else? Who's got a scary bookkeeping story for us? Come on, clueless clients. People, all right, while you're all gathering your thoughts, I'll share one from years ago. I think I've shared this one before, actually. I had a company reach out to me saying, hey, we need help with our books. They're a mess. And I'm like, okay, fair enough. Good thing you reached out to me. And so we go back and forth, the usual kind of, just gathering of information and details. And then eventually I get, this is back in the days of QuickBooks Desktop. Notice how I put that. I know people still use QuickBooks Desktop, but for me, that's like ancient history. So I eventually get my hands on a copy of their backup file. I restore it and I look in, and the first thing I do is run their balance sheet, and it looks like very slim, and which is what I expected. They told me they didn't really know how to categorize things, right? So then I ran the P&L, and I see one account called business expenses. And everything related to the business was in that account. There was no actual categorization of anything, which was funny. And then they had a personal account expenses section, and they were Schedule C, so that was fine, But I was like, okay, so we need to break this out a little. We need some categories.
Well, they're not wrong.
They're not wrong. You're right. They're not wrong. Assuming everything in business expenses truly is a legitimate business expense, right? So anyway,
it goes back several years, but it was more of a QuickBooks story. I had received a phone call from this one woman. Let's call her, Sally. And she was wanting to engage me come in and do a setup. And she talked about her boss, Harry, and I thought that they were married the way she was talking. So when I get there, I found out I was sort of right. They were divorced, but they were living together, and she was his bookkeeper. So I helped them, and then about 5 months later, I get this frantic phone call from Harry. He says, you got to come in, and I've got a problem. So I go in, and he says, I had to fire Sally. She was embezzling money from the checking account, And so then he sort of casually mentioned, oh, yeah, by the way, she was doing crack cocaine. And I'm thinking, say, what? You're living with this person, and you don't even know she's doing crack cocaine. And I mean, I wouldn't let her anywhere near my bookkeeping, let alone my checking account. So needless to say, this relationship did not end very well. He was a former client, but I was kind of blown away that he would actually let his ex-wife, who he's living with, who's on drugs, actually be doing his books. So
it was probably cheap bookkeeping work, right?
I guess
he can pay her in crack.
Yeah, she was doing weird stuff. I mean, she was sending IRS checks to the state revenue office, and you looked at the book. They kept a ledger by hand, and it was just all screwed up. And so
my favorite answer from a client is, like, you're getting into the work with a client, you're going over things, and you kind of point out, hey, that the way you're recording this transaction is wrong. We need to, here's how to do it the right way. And you get that classic answer of, well, this is how we've always done it. I love that answer. Oh, well, okay, then let's just keep doing it wrong. That's a fun one.
I have one from last night too.
All right, let's hear it.
I have been doing these people's payroll for about 10 years, and I've never done their books, but they're working on getting a loan, and their banker is like, okay, the financials that you sent me don't make any sense. They don't match your tax return, so we need your financials in QuickBooks to match what your CPA sent us for the tax return. And this is just a small balance sheet from the CPA. And in QuickBooks, it's 2 pages long, or a page and a half. They had credit cards listed as sub-accounts to the checking account. They had cash as a sub-account of accounts receivable. They had 6 credit cards that were really the same. And I mean, there was just a ton of duplicate stuff, but it took me about an hour to get everything all sorted out and matched to the tax return and sent over to the banker. And they got an email from me as a follow-up to the phone call that we had yesterday that said there's really a right way to do this, and you need to start doing it this way. Because if they're gonna, because they keep getting, it's a chiropractor's office that they had just recently purchased, and that was the way that the previous owner had been doing the books. So now we're gonna start getting them trained on the right way to do it. So hopefully this scary story has a happy ending.
So Tammy's watching on the Facebook live feed, and she says, I'm currently working for a client for the past 2 years, filing everything under the EIN that he provided. In the beginning, I requested past copies of the SS4, and he said it was lost with the past tax accountant. IRS letter came last week that the EIN is not correct. And so the moral of that story is insist on getting copies. Don't accept an answer if it got lost. You can always request copies of this stuff. Make the client request them and get them, and don't agree to proceed without it.
Hi, Seth.
Hi, Linda. Linda's right. Your voice does sound different.
What do you mean?
I mean just that.
Happy Halloween, everybody.
Happy Halloween.
The mask you had there, Linda.
Yeah, I know. She was prettier before, right? But worst story I think I ever had was a guy with tons and tons of paper invoices that always seemed to be missing one key aspect of every invoice. So if it was parts, material, labor, actually it's usually 2 key parts, right? So you'd maybe have the end total, and he would give you materials, and you would have to go through and like reverse engineer every single invoice to figure out what the labor was for each one. And then of course, they always rounded their tax amount up to try to make the math easier in their head. And it just became a complete nightmare. It literally took hours upon hours upon hours to do all of the paper invoices to figure out a sales tax. That was a pretty bad one.
Nice. Nice. Tammy's posting a follow-up saying, do I have to change payroll to make the 1120S? She asked the IRS agent. The IRS agent didn't know. She's asked to call their customer service. That's hilarious.
I had a client one time. He was an attorney. He had kind of a unusual clientele. It was basically sex offenders and drunk drivers. And he was telling me, he says, well, if they lost the case, they were pissed off at him, so they wouldn't pay him. If they won the case, they would just not pay him. So he was having his bookkeeper, who was actually, she didn't have a bookkeeping background, to write off the income. Turns out she was writing it off to a bank account, so she was creating this fictitious bank account that had $10,000 on the balance sheet. And
nice.
Yeah, he was not a long-term client either.
Nice.
Get some strange clients.
No, there's some really interesting stuff out there. And a lot of times it's just people just not knowing better, but that's really not an answer. Like you can't, it's not really acceptable for somebody to say, well, I didn't know, because if you're going to start a business and go into business, it's part of your job to find out what's the right way to do some of these things. You can't go to the IRS and say, oh, I didn't know I had to file a tax return.
Yeah, it's
right?
always a bad sign when you care more about the books than the customer does or the client does.
Yep. It's funny. This is probably more of an auditing story than a bookkeeping story because it goes back to when I worked as an auditor, and we would audit home health agencies and other similar kinds of entities under the Healthcare Financing Administration. And there was one of these companies in Port St. Lucie, Florida, so a big, like, sort of waterfront kind of town. And the owner of this home health agency also had a bait and tackle shop. And little by little, as the auditors working on this particular engagement started digging in, they started to find some interesting stuff that ultimately led them to discover that they were taking costs from the bait and tackle shop and sticking it on their Medicare cost report and getting reimbursed by the government to increase the profits of effectively increase the profits of their side hustle. And it got worse and worse, because then they found out that there was also money laundering going on, because the guy was also selling cocaine, perfectly normal. And
As you do in Florida.
and the interesting thing about that part of it is that we, as the sort of government contracted auditors, once we find out that kind of stuff is going on, we have to stop and file reports to have the FBI come in. And when the FBI has to come in, they have to go in first. And the basic rule is the guys with the guns go in first to secure the place, to make sure somebody's not going to freak out and go crazy on the auditors. Like, they had to make sure we were safe going in there and inspecting the documents and records. So I wasn't there for that. It would have been really interesting to be a part of it, but this was just a story that people who I'd worked with had shared with me that, that had happened. But interesting stuff.
Is it just me, or does all the crazy stuff seem to always come from Florida?
It is. I have a good friend who's an attorney who is always sharing, like, crazy news stories about things and cases that went on in Florida. And he always heads them off by saying, and this one comes from Florida, and we love Florida. And he always has, like, these just crazy stories of things that, he reads these publications. I guess it's interesting to him as a lawyer to just read about different cases. And when he finds something that's particularly interesting, especially because of it being fairly bizarre, he'll share it on Facebook. He's one of the people I really love to follow on Facebook because he actually posts interesting stuff.
Yeah, Adam Carolla does a whole section that's basically, it's what is it, Florida or Hollywood or Florida or something like that. Because the two funniest stories, they have to choose, which one is it? Is it Hollywood or Florida?
Mm. That's right. I always forget there's a Hollywood, Florida, and people in Florida talk about Hollywood, and I think they're talking about our Hollywood here in California. Not exactly the same thing, though.
Well, I have another one if I can go again.
Yeah, all you.
So a couple years ago, I consulted after the fact where a salon owner had found fraud. So you'll have to. It gets a little confusing, so ask clarifying questions if you need to. A husband and wife own the salon. The husband partnered with another guy to start a microbrewery. The partner's wife did the books for the salon. Anybody know where this is going? She embezzled money from the salon. The partner husband used the money. I always forget this key part of the story. The salon owner loaned the money to Tony for his partnership stake in the microbrewery. So the wife gave the money to Tony, and Tony paid the salon owner back with money that was embezzled from their own company to pay back the partnership loan.
That's great.
And then the husband claims to not know that his wife was embezzling all this money, and it was almost $300,000 over the course of 5 years.
Wow.
So sounds like a lot of shoes.
Yeah.
No.
It's it's funny though how frequently these people who do these things do a really poor job of covering their tracks. I mean, sometimes I'm blown away at how easy they make it to uncover their trail once you start digging in.
Yeah, and the salon owners thought that QuickBooks was screwing up somehow. But then when their insurance company sent a forensic accountant in to look at their books, they discovered that it was the cash from the salon that was missing in the deposits.
That's exactly how I uncovered fraud at my first full-time job when I moved to California. Was I took over this territory of locations at the company that I worked for. You know, obviously it goes without saying no names get mentioned on this one.
Hey Seth, I have one for you.
Okay, go ahead. I'll let you
I'm
do
the
it.
other Linda Artisani.
The real Linda Artisani.
The real one. I have one that, this is a funny story, and I heard this from, it wasn't actually my client, but I heard this from somebody else where they were in an audit and the IRS auditor found that this person was spending a bunch of money on a strip club. And it was a husband and wife ownership of a company. And when they went through, and the husband just seemed like, what do you mean this is where that's what that is? And they were asking, why is this? It's not a company that should have had a strip club in it. And come to find out, it wasn't the husband, it was the wife. And the husband thought it was funny and fantastic, but of course, you can't write that off.
That is hilarious.
Everybody's looking at the husband, so.
Well, yeah, that's what you would expect.
Yeah.
Right? Was it like a male strip club or?
Yes.
Okay, it was. All right. Yeah, I had something like that come up once. It was one of my first clients when I started consulting, and I was working with the company to clean up. You know, they had a lot of credit card balances, and I said, well, let's start analyzing this and look at where the higher interest rate cards are so we can start looking at how to maybe move money over to lower interest cards and start getting this debt, you know, managed better. And in the process, so we're going through and cleaning up and reconciling the credit card accounts. And, you know, as is often the case, we as accountants see this all the time. We run across a charge that we don't recognize. And nowadays, you just Google it, you know, and usually you can figure out pretty quickly what it was for. So this one we didn't recognize, and I'm working with the bookkeeper. And so we're Googling it. And lo and behold, it was a charge to like some kind of porn site. And we were there were card, you know, this was a situation where the company had a card with card holders, and so we kind of went back to the person whose card it was on, and we were like, we thought maybe it was fraud, you know, and his face turned so red when we showed it to him, and it became clear what it was for. I felt bad for the guy actually. You know? Kind of, I think he learned his lesson. They're like, don't use the company card for that kind of stuff. If you're going to do that, leave it on your personal card because somebody's going to have to look into that and figure it out at some point. Yeah. My other one was, I was starting to say, my first real job when I moved to California, I took over this territory, and it was bugging me that the reconciliations had a lot of deposits in transit. And this was many years ago already, but still it was even then unusual to have a lot of deposits in transit, you know, especially when the process, you know, this is a big retail company. The process was that the managers of the locations were supposed to deposit money next day from whatever they had the previous day. And so I started digging in and pulling out old receipts and comparing the deposit records from the system to the actual deposits that went to the bank. And in the system, I had it broken down between, you know, how much was cash, how much was checks, and then the total. And as I started lining things up, that's what became clear. I ended up putting this whole spreadsheet together that showed every time there was a difference in a deposit, the difference was the cash portion. And that's what I mean about how little these people do to cover their tracks. I mean, if I was doing something like that, I would at least mix it up and make it more difficult to figure that out. I wouldn't take the whole cash amount, and I wouldn't deposit it back, because it's clear what happens when you see these kind of things. It starts off small. They're borrowing their money because there's a sense of entitlement, and they feel like, oh, it's okay, I can borrow this, I'm just going to put it back, right? And at first they do, but then they realize, okay, nobody noticed, so I can do it again. But then it sort of compounds, and each time they take more, and then eventually it gets to the point where they can't pay it back, and then it compounds and compounds. And by the time I was done with the analysis on this one manager had basically stolen over $20,000 in cash. And the best part is she did not get fired. The person who ran the location that she worked for insisted that she not lose her job. So you have to wonder what was going on there. But they put her at another location. Genius. She did it again in the other location. And because I was in one of my own other locations, I knew to keep a close eye on it. So I instantly caught it. And then they decided, okay, now we have no choice. We have to fire you. I mean, what a dumb thing, too. I mean, not only didn't she lose her job, she could have gone to jail for what she did. We're not talking petty. We're talking grand larceny. And so the fact that she didn't go to jail, really had a second chance at this and still did it, is mind-blowing.
She wasn't justifying this as like a cash business expense, and
I think of that magnitude, you can. I mean, if it was a smaller scale, she could have said, hey, I was just going to get some office supplies and I forgot to account for it and put the money back. But when it amounts to 20 grand, it's a little hard to say that's for office supplies, right? And in my experience, these things, there's usually one or two major reasons why somebody is motivated to do something like this, especially to that scale. It's either drugs or it's some kind of medical issue where they can't keep up with their medical expenses.
I heard a story way back at the beginning of my career where this lady was doing it to cover up for her gambling addiction.
Mm. Yeah, and that's always going to be one hell of a black hole in terms of how bad it gets and how unstoppable it is.
I've got one for you. So this is a client that I didn't stick around very long. He brought me in. His books were a wreck, and I find that every client I go to when I first start working them, their books tend to be a wreck. Mm-hmm. And it's kind of one of those things where just one time I want to come in and see nice books, and help them improve on things rather than damage control. Mm-hmm. But this guy, he was working with one of his investors, and this investor had a portfolio of investments which were out of his pocket, and he had a portfolio of investments through a self-directed IRA with this client. And so what he was doing was like front-loading all of his expenses on across both in his personal portfolio and like reaping all the profits into his IRA portfolio. So what that meant was like barely break even or a loss, out of his pocket, but he was able to, get all the profits into his IRA. And so it's like, I looked at this, I'm like, you do realize this is what's happening. And, if they give me that look like, I don't know what you're talking about, blah, blah, blah. I'm like, yeah, your bookkeeper is sitting right there. He can't lie to me. And so I was like, yeah, I'm out.
Yep. It's amazing what people will do. Chad is watching live on Facebook. He says, love the stories. I had a partner that was embezzling money. Luckily, I found it 6 months into the partnership and went through the interesting process of removing myself from the company. I found it after adding personal funds to support payroll, then looking at the books to find out where the money was going. And that's what I mean. I mean, if you're going to do stuff like this, quite frankly, there are more clever ways of covering your tracks than most of these people do. But I really think that these people just don't think they're going to get caught. I remember years ago when it was around 2008 when the economy really crashed, the whole housing market crash with Countrywide and that whole fiasco. And a lot of people, a lot of businesses really kind of suffered behind that. And that's when you start to see a lot of this come up even more because people start struggling financially and they get more desperate. And I had many clients in those days that had like longtime bookkeepers who worked for them, who I guess at that point when they were struggling and needed money felt entitled. And so I was getting called in on a lot of books where I was helping them figure out what was going on to try and put the trail together to prove that their bookkeeper had stolen money from them, and it's to me, it's fascinating work actually to do forensic accounting, which is what that really is. And there are forensic accountants that actually have certifications. Dennis, you're a certified fraud examiner, right? So, but you don't actually practice doing it these days, or do you ever take on those kind of clients?
It's more of a added benefit. I don't really have the time. I don't do that much in QuickBooks or fraud anymore. I'm more focused on taxes, but it is helpful to have that background.
Yeah, I remember years ago, it was sort of a friend of mine's father who hired me to look at his books. He was going through a divorce, and prior to that, his wife had been working with him in his business. It was a commercial real estate business. And he said, the numbers just don't look right. And this is what I found is that a lot of business owners, even if they don't really know accounting, they have a pretty good instinct as to when the numbers do and don't look right. And so he asked me if I would take a look. And of course I said, look, I'm not really sort of qualified to do forensic accounting per se, but I'll see what I can do. And then maybe if I find if I find enough to make it worthwhile, then you can go hire an actual forensic accountant to do the rest of the work. But then of course the conversation continued, and he made it clear up front he wasn't going to ever want to go to that extent or expense. He said he was really just looking for leverage in his divorce case. So I said, okay. And I started combing through the books, and I always find this kind of work, most interesting because it's like putting a puzzle together, just like doing a cleanup job for a company, even when there's no fraud. But like you said, Jalal, that, they come in and, it's just a mess. But that's why they call us, and that's how we make a living. So, I dare not complain, although I agree with you that it would sure be nice to, well, at the very least, you can get them cleaned up and then do the real work that we want to do, which is the more strategic and analytical work. So that's where the opportunity really lies. But, a lot of the people are going to come to us at first in a state of panic because things are a mess. That's just the way of things, right? Because if everything's perfect, then they almost have no reason to come to us because they think, everything's fine. I don't need any help, right? So I start looking through this guy's books and records, and the records are a bit scattered. There's like different places, and he has spreadsheets where he's tracking all the tenants' rents and how much they should be each month. And of course there's always people who pay late and whatever, but I piece together and I line up side by side. Here's what should have happened. Here's what the rents were supposed to be that were collected each month. Here's what was actually collected. And then you start lining that up and then account for the timing differences for people who paid rent late in the next month, whatever. And then eventually you start to see a pattern emerge. And sure enough, in this one case, the pattern emerged, and it was the same amount every month that ultimately never did get sort of reconciled. And it turned out, when I figured out, it was all from one particular tenant very consistently. And what was happening as we figured it out eventually was his ex-wife, then still wife, was going to this particular tenant and collecting their rent. And I think it wasn't cash, but she was taking their check and going to their bank and cashing the check directly against the tenant's bank account. So there was no trail, right? So she was at least clever enough to try and do that, but still she had no way of covering. Like Jennifer is commenting on Facebook saying, the numbers never lie. It's very hard not to get caught eventually. And she's absolutely right. When you have somebody who's smart enough to know how to put the records together and compare side by side what should have happened with what did, that's when you'll flush out, what's really going on, is by kind of taking that approach towards things every time. So, that was how I figured out that one. And, I gave him everything. He paid me very well for that work and thanked me. And, I never heard back as to whether or not it actually, got put to use in his divorce case. I don't think it did. Like I said, he told me that he was just looking to have it as leverage, like it was like a card he would pull out if he felt he needed to.
I got a question for you. So did you ever find yourself in a position where you created this clarity, had a revelation, shared it with a partner or whatnot, and it truly adversely affected the working relationship between, let's say, partners or owners or, top end?
Yeah, the truth is, with that company that I was working for that I described, where, it amounted to over 20 grand, there were definitely people involved who were not happy with the fact that I had uncovered this. Like I said, there was definitely something going on between the guy who had originally owned that location and sold it to this company I was working for, and he still ran that location. He had some kind of relationship with her, had to have, such that they wouldn't fire her. And he had that kind of pull to say, hey, I get it. She stole this money, but I don't care. She's not getting fired, So when there's that kind of stuff going on, yeah, there were definitely some people. And by the way, I was a temp at that time working for that company because I had just moved to California. You would think logic would say that the company would look at what I accomplish there. And it was funny side story to this. So at the time I used to smoke cigarettes, right? And we were out on a smoke break, me, our manager in the accounting department where I worked, and the guy who used to have the territory before I took it over, who was the one pushing all this stuff through as deposits in transit because he was too lazy to do the actual work. And I jokingly said something about, how much is my cut, out of the 20 grand. And the other guy whose territory I had taken over made a comment. He started laughing, saying, yeah, where's my cut? And our manager looked at him dead serious and says, you're lucky you still have a job, right? Like he's certainly not getting a cut. He's the one who should have uncovered all this. But there was definitely a little bit of blowback, and the fact that you would think after that the company would say, "Oh, we better hire this guy. He's obviously good. He knows what he's doing, right?" And it was just because I used my audit experience and also it's just the way my brain works. It bugs me when I can't put the pieces of the puzzle together. So I will be relentless at doing whatever it takes to because I literally won't sleep at night if I can't figure this stuff out, right? And so this is where if somebody said, "Hey, Seth, you should take medication for that OCD," I'd say, "No way. It's one of my greatest strengths," right? But so you would think they would have hired me. They didn't. It took a good 6 months more before the company finally decided to extend me an offer of full-time employment. Nothing to do with that. If anything, I have a feeling they were the people who were happy that I figured out what I figured out were probably fighting against others at that company to keep me there. So definitely there's going to be some blowback sometimes when you uncover. Katrina, you reacted. I'd like to hear your story if you're comfortable sharing it.
Well, kind
And
of,
if
yeah,
not,
kind of
that's
no.
okay.
Yeah, no, just, going to getting a new client, cleaning up a few years of financials and stating the truth about what was going on. And the owner did not want to hear the truth. Pretty arrogant and no one's going to tell me what to do, how to run my business. Even just such an immediate response while presenting information. It's pretty difficult sometimes when you have cleanup and you go into a business that's a mess. People don't want to hear the truth. They want to live in their denial.
Well, it's touchy because it's very emotional.
Mm-hmm.
And especially when you're dealing with family members running a business together and this kind of stuff is going on, that makes it that much more difficult. People don't want to believe that the person that they presumably care about and trust the most in this world is actually stealing from them. So it gets the one case that I just described with my friend's father, who was getting the divorce, at one point I brought it at the time I was working for a CPA firm. And I brought it to the managing partner. I said, hey, would you be interested in taking this case on, to do the accounting work to help him out? And the guy said to me, he says, no, he says, we don't take on any family cases because, and these were the reasons why, is because it gets very emotionally charged and it's just messy. That was the way he explained it to me. He says, these kinds of cases are just messy. And so he says, and for that reason, we don't touch them. He primarily dealt in bankruptcy cases.
So I got one for you.
All right.
One thing I generally tend to find is that business owners, they focus so much on their income statements, their profit and loss, and go in. I look. It's like, oh wow, this looks like like they're doing well, and then they turn around and say, well, my problem is like I made $1 million this year, but where's my cash? I have no cash, and so. I'm like, okay, so then have you looked at your balance sheets? My what? So I go into their balance sheets and I'm going to try to simplify this as much as I can, but they had a special form of accounts receivable, and it turned out that because of a lack of strategy and appropriate process, they weren't really collecting from their clients. So within the first 6 months of me cleaning all this stuff and getting everything squared away and revamping their process, I helped them recover $500,000 they didn't know they were missing. And that was like, woo, yeah.
Yep. I've told you all this story a number of times where the client, same exact issue. I made all this money, but I don't have nearly enough in the account to cover the taxes and whatnot. And he's like, where'd all the money go? And he insisted there had to be something wrong with the accounting records. And so I never I'm not so insecure that I have to like get defensive on these things. I always just say, all right, well, let's take a look, right? Let's, who is famous for saying, let's look at the record? I think that was Nixon, right? Let's look at the record. So I go to their office and I show them their books and we start going through it. And I immediately look to the usual suspect, which is, the equity section of the balance sheet where all the draws are taken out. And so I show him the distributions, and there's a lot of money in there. And he says, there's no way I took that much money out. And I said, okay, let's dig a little deeper, double click the number. And there's a big $75,000 check, among other things. But that was the big one that jumped out. And he was like, oh, yeah. All of a sudden, it jogged his memory. And I always tell this story and joke that what I said to him was, I said, I hope I get to be so rich and famous someday that I can forget entirely about a $75,000 check I wrote. So, yeah, it's funny. And that's usually the place to go on those questions is look at what they drew out of the business. And if it's not there, it's in a loan to shareholder or owner account somewhere. That's usually where it is when they don't have the money. So, which, by the way, speaks to a good strategy for us to use when we work with these clients, which is to start building a strategy around building equity, which means not taking so much out in distributions. And if you need to take money out, take it out in the form of payroll, right, Shannon? Because then at least you get taxes taken out and paid in, which helps you owe less money at the end of the year. And also, at least that way you're getting the benefit of an expense deduction on the books behind that payroll expense. And then you can start setting up retirement plans like SEP IRAs and things where you pay in based on a percentage of payroll, right? And
you don't want to do that, though, if you're an LLC or a sole proprietor. You'll get into more trouble taking payroll then.
Well, yeah, of course. We have to keep in mind the context that, we're talking about doing a corporation. That's one of the reasons, though, why, at least here in California, the companies I work with, unless it's a real estate-based business, it's almost always going to be an S-Corp here. For that reason, is because there's advantages, there's things you can do tax-wise with an S-Corp that you couldn't do with an LLC. Right? Especially a single member LLC, which is, completely disregarded for tax purposes. So yes, of course, and this is where I always tell people, I had a client reach out to me recently. He's got a side business that's becoming more than just a side business. And he was asking me what I thought he should do as far as, starting to track the costs and things. And I said, well, first thing you should do, because the guy's based in Texas and I don't know the rules in Texas. I said, and it is a real estate based side hustle that he's got going on. So I said, you need to talk to a CPA who knows Texas rules, and you need to talk to an attorney, and because there are partners involved. And I said, so the attorney is going to protect your interests in terms of your deal with your partners, and the CPA is going to protect your interests in terms of the best tax strategy. Or better yet, find a tax attorney, and then one person can do it all, although they get expensive. But it might be worth it, to spend the money on somebody like that to get it done right. Always, always, always. But, again, going back to the strategic part, the idea is to try not to take out too much in distributions because you want to build the equity of the company, And as we've kind of pointed out this morning in a few of these stories, a lot of times there's too much emphasis on the P&L and not nearly enough on the balance sheet on the part of the business owner. And so we're not looking at the whole picture. And the whole picture strategy, I believe, should be around building up the equity section, as a long-term strategy. Because what that speaks to is that it's great to make a profit, but what's really just as important, if not more important, is after you've made the profit, to retain those profits in the company, which is how you build equity, so that you're in a position to take advantage of opportunities, right? One of my earliest mentors when I started my company, he was one of my clients that I really looked up to at the time, and I remember him saying to me, make sure you always have access to cash, because that's how you're always going to be in a position to take advantage of opportunities when they show up. And opportunities have a way of doing that. They have a way of showing up. And if you don't have access to the cash that you need to take advantage of those opportunities, because let's say you've taken all your money out in distributions and haven't put any kind of reserves anywhere, then you're just going to miss out on that opportunity. So, and I love the, what do you call it? I love the book, The Richest Man in Babylon. If you haven't read that book, read that book. It's actually a good, easy read. And one of the main principles he just pounds into you in that book is how important it is to take 10% off of everything you make and put it away. That's your money to keep, that you invest. And he talked, because it's the richest man in Babylon, and he's talking about Babylonian times. He talks about it in terms of gold coins, and you take 10% of those gold coins and you turn them into little slaves that go to work for you to create more gold coins. And I actually just read that book earlier this year, and it really, in a lot of ways, changed the way I think. And I'm going to go as far as to say that because of what I, learned reading that book and was reminded of, I've actually put away more money this year than I've ever put away before in my life, because it put my consciousness on the fact that that's what we need to be doing, And again, if you build those reserves, then you're first of all, you get a lot of peace of mind because you know everything's covered, right? But then you also know that when an opportunity comes your way, you have the money, which is usually what it takes to invest in whatever you need to invest in to take advantage of an opportunity. A quick classic example is, let's say I'm an e-commerce business and I have an opportunity to stock up on inventory at a really low price, right? But that opportunity's window is only going to be for a week or two before somebody else scoops it all up. If I have the cash, I can go, and especially if it's a product I know I can turn over, then obviously I want to be able to take advantage of an opportunity like that. If I don't have access to the cash to do that, and access to cash doesn't just mean literally just cash in the bank. It could be line of credit, whatever. The point is I need access to the capital that I need to go make that investment, stock up on that inventory while I can get it at a low price, right? Because then obviously I can make more money on it when I turn it over. So Brad's like, preach, Seth, preach. So, and I hope I don't actually sound preachy, but I get emotional about these things because I believe in them, and I see a lot of people struggling, and I've experienced those struggles myself on and off over the years. So I know what it feels like, and I know how frustrating it can be when we struggle, financially and otherwise. And so I want to do whatever I can to help others get out of or avoid altogether those kind of struggles. So that's my only intention here. Tammy says that referring to The Richest Man in Babylon is one of her favorite books. So, any other scary bookkeeping stories? And remember, even when you think about the people who do these things, who commit these sort of acts of fraud, I know this sounds almost counterintuitive. You're not inclined to feel sympathetic towards them, but it will help you, I think, in a lot of ways if you can learn to get out of your own head and try and think in terms of understanding it from their perspective. It will help you understand the mindset that goes into somebody who does these things. They're usually desperate. They're usually feeling a sense of entitlement, like I've mentioned a couple of times this morning. Oftentimes there's a drug addiction situation or a gambling addiction situation, which I can definitely speak to from personal experience. Luckily, I was never in a position where I had to, steal to get mine, but it could have gone there if I didn't get clean when I did. It could have easily gone there. Or as I said earlier, there's a medical situation going on. Years ago, I had a client when I took over. He had to let go of one of his employees. That employee had medical bills that became insurmountable, and so he ran a few scams, stealing money from this client of mine, and because he was using the money to catch up with his medical bills. There's been one case in all this time where I ran into somebody who had actually stolen the money. Relatively speaking, not a whole lot of money. It was like $1,500. The client left her with checks payable to cash while he went out of town so that she could pay his bills for him. And she took the opportunity to take a few of those checks, make them out to cash. He didn't leave them payable to cash. He left signed blank checks so that she could manage it. She took the opportunity to write a few payable to cash, which was at least kind of a smart way to cover her tracks because it would be less easy to trace. Wrote the checks to cash, took the money out directly against his bank account. When we caught it, she put the money back immediately, which really confused me because usually the money's not there to be replaced because, again, it's usually they're doing it because they're trying to keep up with something somewhere else financially. And I never got an answer from her. I actually reached out to her because she was somebody I knew for years. She had worked with him for years when this happened. And I tried to press her, like, why did you do this? Because it was also a situation where if she needed money, she could have easily gone to him and said, hey, can you loan me $1,500? And he wouldn't have blinked twice. And he would have just given her the money. So it was really weird. Like, why would you do this? Especially given that you're able to put it back. Clearly, that means you didn't really need the money. Maybe she just got off on the idea that she could get away with. That's the only answer I could come up with. I'm certain it wasn't a drug situation because, again, that she wouldn't have the money. She would have had to pay the drug dealer. So that was the only case over all these years I've been doing this that really, to this day, I'm confused about it and don't really have a clear answer as to, what was the driving force behind why she did it. And that's really my point. There's always a driving force.
Well, in fraud, they have what's called the triangle of fraud. There's pressure, opportunity, and rationalization. And a lot of times people think they're just borrowing it and they're going to put it back, but they never end up putting it back, or they've got a drug problem, or, some kind of medical problem. But the key is you have to be able to rationalize it, like you're being paid not enough, or you're being treated unfairly, and you're just sort of evening the scales, against the company. But
yeah, and again, I think the rationalization really comes side by side with that sense of entitlement that people get. Like, I deserve this, Like I said, when the economy crashed in 2008, that's what I ran into a lot of. And it was sort of apparent, even though nobody ever actually admitted this to me directly, it sort of became apparent that they must have felt like, because you have to wonder, why would somebody who has been working for a company as their bookkeeper for so many years, faithfully, loyally, with all the trustworthiness, all of a sudden, breach that trust? And, the only answer that makes any sense is they felt they were entitled. They got desperate. They really needed the money. The economy's crashed. Now they're in trouble. A lot of people were in over their heads with their homes, couldn't make the payments. The arms on balloon payment loans, expired. And now all of a sudden people were facing losing their homes. And so then they start rationalizing, like you said, Dennis, and they get a sense of entitlement and think, well, I've been working for this guy for years. He should have been paying me more anyway. And that's how they justify taking the money that they take, is they rationalize it. And that rationalization comes from that sense of entitlement, which of course is wrong, because if you really felt you deserved it, you would go to the person and say, hey, I really think I deserve a raise, right? Hey, I think, I think I've proven myself. I think I've done a great job for you. Can you increase my pay? That's the right way to do it, right? That's the honest way to do it.
The first person I would suspect be the person that people would suspect the least, like the kindly old grandmotherly type that's bringing cookies to the office, or good old Uncle Bob who's been here for like 30 years, because they have access, they know the systems, no one would ever suspect them. And so I always say, suspect the person that you would least suspect.
Mm-hmm. Well, and it's a good point you bring up, Dennis, because the other thing they say to look for is when you have the person who's in charge of the money, like the controller or the bookkeeper or whoever, they never take vacations.
Yep.
Because if they go out for a minute and somebody else has to take over, they might figure out what they're doing. So there are certain signs like that, that you look for in terms of suspecting, if somebody might be stealing from the company.
I never thought of that.
What's that?
I had never thought of that.
Yeah.
I had a situation when I worked for Washington Mutual. There were two people that I thought they were having an affair because they're both married, but they were always going, they take like two people come over and pick up bank tickets. And so Henry had to go on vacation, and Lori was doing his backup, and she noticed something that looked really suspicious. And so she went to internal audit. Turns out Henry had been stealing money, and he had rather stupidly bragged about buying a new $30,000 car for cash, So sometimes these people aren't always the,
I'll end this on this note, because I think this will really underscore everything. Can anybody tell me what the biggest internal control weakness is in any organization?
People.
More specifically, the biggest internal control weakness in any organization.
Not having separation of duties.
Yeah.
Well, that plays into what you need to do to prevent this.
Passwords.
So we're getting close to it.
Passwords.
And a lot of people are going to say cash, which is true. That's a big area of weakness, as there shouldn't really be any cash dealt with, especially this day and age. There's no reason to have cash. But the biggest internal control weakness, and this is actually documented in an audit scope when you're actually putting an audit together, and I know because I used to do this, the biggest internal control weakness comes out of when you start the audit and you're actually interviewing the owner and other people to get a sense of whose duties are what, going back to Shannon's comment. The biggest internal control weakness in any organization can be summed up in a single word, and this is documented when you're doing audits. The word is trust.
Mm.
Trust is the biggest internal control weakness, because when somebody is very well trusted and measures aren't put into place to almost assume that you can't trust anyone, and it doesn't mean that you don't actually trust them, it just means that you put measures into place to, for those, what do you call it, separation of duties and other controls and balances.
Trust
That
but
trust
verify.
thing is where your guard goes down and you don't implement those measures, and that's when somebody gets the opportunity that Dennis mentioned to take advantage. And people will take advantage of that trust if and when the other pieces of that puzzle come together to give rise to somebody being in a position where they'll feel, justified or rationalized, rationalizing their way into doing something. So trust is the biggest internal control weakness. When you're setting up the systems, you want to say, granted, I trust everybody, I love all my employees, but we're going to put a system of internal controls into place that assumes we can trust no one. And as long as everybody's on the up and up, they don't have any reason to worry anyway. So we're just going to do this. And that's always how I look at it if I'm being hired to help companies, in that way, in setting up their systems of internal controls. And
Yeah,
that,
that's a. Oh, sorry.
go ahead, Joe.
As a trust but verify, that ties in directly to one last horror story. We saw this bookkeeper who was very well trusted, but what she was caught doing was she was paying a check to American Express, but to her own American Express credit card as opposed to the company's. And then she was turning around and adjusting the check in the financials and booking it towards some kind of expense. And so in the end, we found it just by looking at the checks in the bank account, and saying, and if you weren't looking closely, you say, oh, it's American Express. It was probably a company, it probably reconciles out, because we know we reconciled our American Express credit cards. So we had to look very closely at the accounts there. It was very shady.
Yeah.
But yeah, trust but verify.
No, anybody who's used QuickBooks knows it can be very easy to write a check to one person, then go back into QuickBooks and change the payee. So the only way to truly verify anything is to look at the source documents, which, like you were just describing, July, would be going to the bank and looking at the image of the check that got paid to see whose name was actually on that check, and look at the back to see who actually endorsed it, right? Whose account did it actually get deposited into, right? Because all those things are areas where people can manipulate, which, by the way, is another reason not to use checks anymore. There's, again, except for very rare instances, I think, there's so much technology out there where to pay something by check is in itself an internal control weakness this day and age. There's so many ways to pay people electronically, which is so much more secure that, when I look at companies, when I take on new clients, one of the first things I look to do is eliminate any process that includes writing or printing checks, if it can be avoided. Some clients insist this is how I have to do things, or like we talked about at the beginning of the hour, they say, well, this is how I've always done it, right? And they're just so stuck and set in their ways that they're not thinking about how to, A, get more efficient. Writing checks is very inefficient. If I print out a stack of checks, now I've got to sit there. Somebody's got to stuff envelopes, get the postage on them. Even if you have a meter, it's still not nearly as efficient as going click, 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 pay, right? Like Jalal said in the chat, that's why we use Bill.com. I use Bill.com. I use Bilbies. There's a lot of apps out there that will facilitate electronic payments, right? Bill.com, Bilbies does it, Veeam. There's a number of things out there. I didn't have the best experience with Veeam, so I don't use it, but I know a lot of people love it. And anyway, that's that. So I would go as far as to say there's almost no reason why you should be writing checks in this day and age, except in very rare instances. I write one check a year to AAA to do my DMV registration renewal, because that's the only form of payment they'll take at AAA when they're taking money on behalf of Department of Motor Vehicles. So anyway, now that's our story, and we're sticking to it. And I hope you all enjoyed this. If you want another great Zoom later today, check out SBAA on Facebook. That's Gina's group, Small Business Accounting Advisors. They start talking at 2 o'clock Pacific. They go live at 2:30, and they always have a great conversation. It's usually anything goes, open session. You get what you get. And we'll see you all either there or around the web all throughout the week.